Hello, traders. Welcome back to our daily trade journal and market analysis, where I try to journal every session, not just for accountability, but because it helps me spot patterns and mistakes faster. And we also just go over the market analysis and our VX algo signals as well to see how effective it is, what worked and what didn't work. And it just helps me spot mistakes on that better as well. So if you guys are interested in leveling up your process, I highly recommend you do your trade journals and jog it down every day. So for today, I made about $440 trading only MES because the market was extremely wild. There was a lot of range expansions. So market was over 100 points today, and that's very unusual. Usually the market moves anywhere from 40 to 60 points, and today was 100 plus. And because of that, I just kind of waited patiently for big levels to hit, and things worked out extremely well because I was very patient with it. So I'll show you some stuff. We'll go over some of the signals that happened today, and then see how accurate they are and how well they work. So first signal of the day was market structure being bearish. That was extremely effective. We dropped a lot from that. And then by 10:12, we had our first buy signal. So that worked really well too. But in addition to that, I had also called out 62.45 being a major level that I expected the market to bounce today. And that level held pretty good, the 62.45. That was essentially the bottom here. So that was this level. And the reason I called out that level, I'll go over a little bit toward the end of the video. We'll continue watching the signal. So 10:12, yeah, signals worked out pretty good. That was a buy signal. We pushed up. We broke over the first support or resistance here, right? Which is this first moving average. We went to back test it, and then 10:20 we had another signal, so that was another indication to buy. And we pushed up here. We couldn't break through. Back test a little bit, pushed up again, could not break through. So eventually lost it, right? And and now instead of this being a support line, that small line became a resistance line. And as you can see, it became resistance line throughout that point here. So now bears are in control again as all the candles are under the moving average. And then eventually by 11:30 here, there was a huge push. We pushed up, pushed higher to the second moving average here. And we struggled a little bit there at that red line, but eventually pushed forward. And this is where we really had trouble. So this area we couldn't break through, and then back tested again, could not break through. So that ended up being a double top for that day there. Came back down, trying to hold its area to see if we have momentum to push through. But then eventually the bears just took over and started pushing it down. But this was a weird point where the market structure had flipped bullish for a second because there was just enough volume from here and here to kind of push the structure bullish. And then eventually by 1 p.m., that got invalidated. Structure became bearish again because all this selling volume cancel out this selling volume, right? So now at bearish market structure, you want to short any rips. So over here, you want to short this. And then probably over here, you want to short this as well. So this was another test at that resistance over here. That's the third test, and that failed. And then the end of the day, we had one more market structure flip at 3 p.m. That was a market structure flip bullish, and that indicates you to start buying the dip at the moving averages. And that played out pretty decently toward the end of the day. This is a pretty wild day. A lot of things happened. I think stocks tumbled as the job data was really ugly this morning, and that kind of like, you know, gave a fear of a recession thing kind of going on with job number being really bad, and there was a lot of revisions in job number too. So, going a little bit further into the market on why I thought that 345 level was going to be key today, I'll show you guys. So I was looking through the chart last night, and I was just going through it, and I was like doing the math and trying to figure out, what is going to be our key level today that the market is going to be extremely respectful to it and just bounce from it. And that was a combination of finding the support that worked out really well. So you can see that this line here was the area that held really well in this here, right? So that was July 16th, and this was July 7th. Those areas really important. And then if you go a little bit further into that time frame, this is also somewhat of a pretty big area that, we had hit on January as resistance. This was major resistance going back from January 30th to February 19th. And that line, that area was somewhat also a similar range where if we had dropped, like 120, 130 points, that's the area we would land, and that would be close to a 2% drop for the day. And if that happens, usually the PPT comes in and they start, bouncing the market a little bit. So that's why that was a level that I picked throughout today, and we ended up sniping that level, and we had a huge bounce, right? So if you guys caught that level with me here, we had a huge bounce up. Same thing again, it kind of held somewhat decently, and it bounced pretty well, like 40 points, 35 points. But going into the market further, let's see for Monday. I think key levels to watch are if we can break over 63.10. We're somewhat coming into a little bit into bearish, more bullish territory. If we claim this area, if we can't claim this area, then we're still bearish. I expect us to go back down. But if we can claim this area, we can chop around, and then we can eventually break above 63.30. We could have sunny days again. Bulls could come back in control again. But if that doesn't happen, we'll continue to remain bearish. Uh, Going into a further time frame, if you look at the candles, we're still pretty heavily bearish. There's still a lot of selling today, so there's no indication of market potentially stalling other than the fact that we're at this support and we're holding the support right now. So Monday, the support could get lost or it could bounce. We don't really know. Only time will tell on that point. But yesterday, going to close, I did mention that we were getting some dojis on the close here. And when that happens, there's a good chance we get flush. And today, that happened. But the crappy part about that was that happened overnight instead of happening during market hours. I mean, most of it happened overnight. So a lot of people couldn't catch that move as well. And usually a big sell candle like that does carry more into more selling. So I'll show you an example, right? So that's a doji. Doji means indecision. And this is a drop heavy candle, right? Um, that's a pretty high volume one too. That's a 2% day almost. So when was the last time that happened? In April. So a lot of people probably have this question in mind, is that like, is this gonna be a repeat of April, or will things just bounce from here, right? So if you look at this April candle here, we have some dojis, and then bam, big drop, right? Same thing over here as well. February, we had a doji, and then big drop. But the none of these, the volume was as big as this one, right? So unless they pull a miracle and something happens over the weekend, we will probably see a continuation of this. That's just what the volume dictates at this point. But could it stall? Could it bounce? Yeah, anything could happen, man. So I hope that helps. I hope that gives you guys an interesting perspective in the market. And if you guys are bullish and you want to see the dips being bought and you think market's going to recover, look for that 62.45 area to hold. But if it doesn't hold, brace for for impact. So good luck. Have a great weekend, and thank you for watching. If you enjoy our content, feel free to subscribe and give us a thumbs up.